is one of the most confusing Bay Area market updates that we are doing in a long time because you got things going on. You got layoffs that occurred recently at Microsoft. You got the stock market that has rebounded significantly. You had a much slower than usual spring season. You have interest rates rising. You have so much uncertainty, yet prices seem to be still rising. My name is Spencer Sue. In the last 7 years, we've helped over 300 families with their moves. So if you're looking to go over a game plan to figure out what is the best solution for you, my team would love to be your trusted real estate resource of choice. But let's get into the data itself and let's break it down. What is actually happening and what can we expect moving forward? Let's give you a little bit of the recap first. Let's first talk about the general markets. First, the stock market. If you have not been monitoring and you just think things are what they were before, things have changed drastically. Look at the numbers. From the bottom of April 8 to now, the NASDAQ has increased 26% in 1 month. Absolutely stellar. Even at the peak of things, we're only down by 4%. If you would fast forward that you're going to say, we're going to have tariffs, we're going to have uncertainty, we're going to have layoffs, that the stock market is still at the current level, no one would have believed you. Now, you can also look at this. Interest rates have also increased. If you look at about a month ago, it went up about 0.2%. So now you're on kind of around an average about 6.8%. Usually jumbo loans are going to be a little bit lower. So that's something to take advantage of when you're buying more expensive homes. But interesting things. Now let's take a look at the actual numbers now of all the different counties that I pulled up all mashed together. We got Alameda County, Contra Costa County, San Francisco County, San Mateo County, Santa Clara County. And you can see it's a combination of single-family condos and townhomes. You can see the median price right now. Look at this, incredible, 1.4 million. This is the highest it has ever been. Now, you may be asking yourself, how is this possible? Is there a specific county doing far better than others? Is there specific asset types that are doing far better than others? And the answer to both of those is a resounding yes. When you look at this, let's just quickly break it down by the county so you can see for yourself. Who is the big winner of them all? There is one clear winner, and that clear winner is Silicon Valley. And this is going to be the trend, and it's going to be continuing to be the case, I think, for the foreseeable future. Why? Because as jobs are tightened, people need to figure out ways to improve their lifestyle and get a better commute. So the areas that are close by, especially with these well-paying jobs, and the jobs that require people to be back in the office is going to be a huge driver. Because take a look at this. When you look at single family condos and townhomes as a median, you're at $1.78 million. This is higher even than 2022's previous peaks. Now, this is not the case for all of them, though. It's only Santa Clara County that is this way. So if you look at the other counties, you look at another one that you imagine would have done potentially pretty well. You look at San Mateo County. If you take a look at San Mateo County, it has done well, but not the same as Santa Clara County. Right? If you look at the numbers, $1.8 million, even though it is still higher than 2022, there were some glimpses of last year that was still higher. Still really, really well. Very, very positive and a great outcome for San Mateo County. Now, if you look at, like, let's say San Francisco, we all hear all the different things that are happening with these AI companies, but the slight catch of those companies is that they're not really going public. And the question is, even though they may be having their office in San Francisco, are they actually deploying, are people deploying their capital into that city or not? That's a completely different question and different thing for them to consider. But at the same time, they are also still doing pretty well. Look at this, 1589. Higher than the previous years, not higher than 2022 numbers, but still a general increase. Now, keep this in mind. We are recording this as of May 18th. We're more than halfway in. All of these numbers are looking pretty good, but it's not the same story for all of them. The key is the single-family homes are the real drivers. Because take a look at this in Santa Clara County as an example, if you decide to want to buy Santa Clara County. Look at this kind of chart and this increase. Single-family homes, $2.2 million. This is more than a 10% increase of last year and also 2022. So really, really powerful growth. And this year's numbers, I thought things would change, but like, who knows what's happening anymore? Like, it just shows like the demand is just so strong that it's just what it is. Now, you do see some weakness when it comes to asset classes, though. So if you look at condos and townhomes, and this may be not because of the maybe asset type itself, it may actually be also because of the price range. Because the thing that I need to start differentiate for people that watch this is it really depends on which price range you're looking at. So if you look at condos and townhomes, these price ranges, you can see the peak was actually February, March of this year. And then it's actually much lower. It's about 9-10% drop. But you saw for single family, it kept rising. So when people think about, oh, things are going bad or good, you gotta separate that noise. We gotta break it down now of like it's actually the condos and townhomes that are the discounts that are happening, but single family is still super desirable. So regardless of all the things that you hear in the news, it could get higher and it could get stronger, right? So it's super important when it comes to the asset class. How do we differentiate ourselves? Now, let's break it down for you in terms of general numbers. And let's look at some of these other specs. I'm going to shrink it now to April because I want to go through complete months. So if you look at the months of inventory, this is some of the things that has improved across the board. So even if you're looking at, let me actually include in this case, single family too. If you're looking across the board for inventory wise, here's the month of inventory from January 2022 to April 2025. So you can see how does it now stack with the previous times. The numbers are a little bit higher, but it's nothing too drastic in terms of how the months turnover, right? Things are still moving quickly. It's still a seller's market when it comes to these properties. Now, this is broken up though. When you look at the single family condos and townhomes as a mix, you can see condos and townhomes are going to be slower, right? So when you look at this, you're going to see the stats itself that condos and townhomes will have more months of inventory. You can see those numbers have continued to rise. And so that has been very helpful for buyers to be able to, one, get into the market, but also get things at a discount. Because you can look at this, the condo and townhome market is the one that has nearly doubled versus the same time last year. Very interesting things to see, right? And that's why you do see those discounts and you see those opportunities already. Now, the other thing that I'm interested in is look at the number of new listings. So people always complain we have no inventory, there's no homes to buy. That is not the case anymore. Take a look at these numbers. The numbers of April, and here we're going to pull up May again. The numbers of April of 2025, you had 655 new listings. This is higher than April of 2022, right? So these are way higher than it was last year. May has already started to be less. Like this number may or may not, it'd be tough to be able to break that number now. It's like, it seems like it's slowing down. Because here's the interesting things that's happening. You have a set of sellers that are willing to sell for less, but you also have people that are just like, look, if I can't sell it, I'm not that much distressed. I'm just gonna wait and see. And so they're gonna remove their home and just have it as a rental. So it's a kind of an interesting thing, but there's not too many people that are really strapped for it, but everybody still wants to move on with their lives, right? Like a lot of my clients, we want to sell their place, we want to move on to a new home. Like, yeah, I'm not going to be able to get the best possible time for it, but I want to move on, right? Like, how long would I have to wait? So there's also that demographic where it's not like distress, but people want to move on. Like, if you want better schools, you want to move on. If your commute is terrible, you want to move on. You want a yard, you want to move on. You're tired of stairs, you want to move on. Low interest rates and what you may sell it for may not be that much of an impact for that. All right. So these are the things to be mindful of as you figure out your next move and your next steps. You can see across the board, new listings has been really, really high. Now, the thing that I'm also really, really interested in is also the number of homes that are in contract, because this shows like the volume of people getting into contract, right? And let me look this up too when it comes to single family and this is Santa Clara County. It shows like Santa Clara County is the leader right now by far. The others will be actually just less of this, but there'll be a variation of this is the way you think about it. But if you take a look at this, the number of homes are going contingent and pending right now. And we're going to be tracking through May. Take a look at these numbers. These numbers were actually quite good, quite not good. They're okay, as you can see, of 2020, of March and April. They were all lower of last year and way lower in 2022, but still higher than 2023, right? So it also shows like the new listings is higher, the number of buyers is less. And if you look at this, like we're halfway through May, it's going to be slower for the like especially the last weekend because of Memorial Day weekend. So you maybe get probably a blend of about 1,000 in contract by the end of this month. So you can see it is slower. Now, by how much, you can see maybe 10% slower than last year, but you have more new listings. So it may feel like it's a better opportunity for you as a buyer. And that's the reality of this all, right? That's the story of this whole thing. Like it is actually better, but it's also all relative as to what you may want to do. But it's also going to be interesting to see like how will things play out as the months goes on. Because right now the stock market has rebounded, and so as long as these trade deals are continue to occur and there's still stability of the stock market, I suspect that because we had a weaker spring, we may have a busy summer again. Like there's no reasons why not. Now, interest rates will probably remain the same, if not higher. I don't think the interest rates are getting any better, but as long as the equity is there, people have that confidence to then move on and do their investments. And so if you were a buyer, what should you be doing? You may want to take this as an opportunity right now to try to get into what you can. Because if you're in that mindset, hey, look, if summer is going to be kind of the same, like the same as now or better, I do already see is better right now, just because the market is clearly better. I mean, you're literally up 25% than a month ago. So at this point, like if you're a buyer, if you're a single family, it was always competitive. So just keep doing what you're doing, be aggressive, take advantage of these times. There's plenty of inventory, adjust to what's realistic. If you're planning to buy a condo or townhouse, there's many opportunities to buy things at a discount. You can see things are like 10% off the top of a few months ago. I don't know how long that may last. So take advantage of that while you can. But be mindful. That's Silicon Valley. If you're buying in other areas that have a heavier traffic commute, like in the Tri-Valley or like in Contra Costa County, you're going to get a lot more opportunities, a lot more wins. We cover that area too, and so we know what's going on there. But be mindful of that. Now, if you're a seller, look, it's going to be really interesting to see. You can see single family still has done well, so there's no need to wait for that, right? Like maybe it goes up even more. I don't know, but it's still a really, really good time. But if you look at then condos and townhomes, if you own it, you might have to level set expectations. You probably want to have it lower than what things have sold over the last 1 or 2 months to be competitive against the others. Because for condos and townhomes, you don't want to look at what has sold. You want to look at what's on the market right now so you know who you're competing against and see how long they've been on the market for. Because from then you can figure out the strategy. Do you still want to do what you need to do? Or should you already undercut it to be competitive on price so that you're the go-to place? Because you don't want to sit on the market for a long time, especially if you have goals to move out of the area or to use that to like trade up for another place. Well, if this was helpful, my contact details are below, 408-547-4590. Let's go over a game plan today. We are being super active. Every week, we're still helping people get into contracts, successfully buy and sell. So wherever you're looking at, anywhere in the Bay, we can certainly help, and we can continue to be your trusted real estate resource of choice. See you next time. Bye now.